we'll see. It should be interesting. Again, we talked about this, and today we'll spend a little bit of time walking through the markets and seeing where one of the tools we have in tastyfx is client sentiment. And we're going to walk through that. So we're seeing a softer dollar a little bit across the board. We saw this Sunday night. The shift in polls to Harris saw some dollar selling. Now, all day long yesterday in a very quiet market, everybody was buying dollars. So euro traded a little bit lower, sterling traded lower, yen traded a little bit lower. The dollar was basically stronger across the board. They're trying it again this morning, selling a little bit of dollars. We're seeing sterling up, dollar yen down, euro up.
Aussie's spiking pretty good.
Aussie is by far the outperformer today. So we're going to, again, this is what I want to keep my eyes on because this will be a little bit more elastic. We'll see a little bit, whatever happens, dollar-based wise, we'll see this have an expanded, I think all the currencies will have an expanded range because no one's going to necessarily want to get.
It definitely seems like there's not really a tell one way or the other. Like I would love to open up, for example, dollar peso here and say like, oh, the market is moving in this direction, and thus the market is saying that one candidate or the other is in the lead or likely to win.
Right.
But you paint the picture super clearly, Pete. I mean, we saw the dollar buying last week in tandem with Trump's increased odds of winning. To start this week, we saw the dollar and a bunch of markets that have been correlated with Trump's candidacy give back some ground.
A little bit.
But not enough.
A little bit.
Not enough to the extent that you would think like, oh, it's completely flipped and now Kamala is really in the lead. It really looked like, for the most part, either profit taking or just the market kind of middling a little bit here. And if we pull up the platform, you can see that not only did we get a little bit of a pullback right here on Sunday night, but we saw plenty of back and forth and continue to see back and forth, where at certain points, the dollar yesterday, Pete, both going into the U.S. session and during the U.S. session to start the week here, looked like it was going to maybe move back towards those highs in tandem again with maybe Trump moving further past the 55 to 60% range to the 60 handle and beyond. We haven't seen that. We've seen this market relatively flatten here, whether you're looking at dollar peso, we'll look at a couple others in here. But yeah, market's not really giving you one side or the other. There's no tell. This isn't an FOMC event, Pete, where they've priced in, 95% of this person winning. And with that, you're likely to get a lot of swings back and forth. What market do you want to look at for potentially scalping the back and forth, or just to watch if you're just watching the election and not trading among these forex pairs? Where do you go first?
I think you go to euro, you go to Aussie. Both of those, I mean, for today, scalping back and forth, I take the range at face value. It's giving you, it's not a huge range, but it's definitely, I don't think we well north of 109. Maybe we challenge the highs a little bit up to the 20s, or we dip back down to where they had sold them off Friday afternoon, 108.5. But there's some tradable range up to when we start to get announcements. Then once the polls start to close, we're going to widen out what we're going to look at as interesting scalping ranges. But for today, you're not, again, they're going to have exit polls and stuff, and I think they're constrained as to when they can publish those. So you'll see some stuff come back and forth. But I think that today you take the range that we have, which isn't huge. And if you want to do a little small scalping around it to stay engaged, absolutely stay with that. Stay where the liquidity is. And Aussie will give you that too. It's just giving you a little bit bigger range to scalp.
Yeah, and you raise a great point that the timing aspect. Maybe until today's equity close, you would be willing to scalp in a range of 50 points. And that's what this market has given you. If you're looking at 108.60-ish being the mean for the last week of trading here in euro dollar, for example, they've traded down to 108.10, 108.20, and they've traded up to 109.10, close to 109.20 yesterday. Like we said, on the peak of the dollar giving back ground and a bunch of these markets giving back ground from the prior week, this market got up to 109 and has seen some big chunky moves one way or the other, and is likely to see more of that reduced liquidity going into the unknown.
Right.
And just a bunch of information that maybe is helpful, but doesn't make or break the actual decision that comes out. It's almost like, throughout today and getting closer and closer to tonight, there's a handful of CPIs and non-farm payrolls that are leading up to a big FOMC.
Right.
But that being said, when you get to tonight, you're looking at a wider range for these markets.
Absolutely. And that I'm not getting married to the first spike being, if I'm going to look at that expanded range, it will get thinner. And remember, when polls start to close is just when the currency markets trade 24 hours a day, but they tend to be a little bit thinner late afternoon, early evening, between 5 and 7 Chicago time, 6 and 8 New York time, before the full complement of traders come in Japan and China. So they'll be a little thinner and whippier. We're not going to have results right away. I just don't close in the West Coast until probably 8 o'clock at night, our time, whatever.
Yeah.
But we'll want to be mindful that markets will get thinner. I think some of the back and forth we saw yesterday and today is guys taking positions off and just everybody's lightening up just a little bit, as you would probably want to do. You don't want to necessarily, you want to take your ideas off, but you want to make sure manageable that if it goes against you, and it's interesting, again, we're going to see some herky-jerky moves. It may give you the opportunity to get some of your position back at a better level or manage what you have on.
Yeah.
So, but once we get past that point today, again, 4 o'clock in the afternoon Chicago time, I'm going to widen out and be looking for more and not expect that it's going to be a one-way rip and stay there. If we do get movement back and forth, chances are it's going to be back and forth. So I want to be mindful. I'm going to bring my size down, but I'm going to stay a little bit more active.
You wanted to look at where people are positioned.
And I think that's
good.
That's an interesting way to do this. Now, there's ways to do this with futures once a week. You can look at a commitment traders report, but we have something on the tastyfx platform called client sentiment. That's really kind of an interesting dynamic. And what it does is show that clients throughout IG Group globally and through tastyfx, what they're leaning, long or short, each of these currency pairs. And you can look at it today for the week, for the month. And right now, client sentiment is showing that this is kind of interesting because we're at the lows of the range. Now, in Euro, we tend to see at extremes the market either very long or very short. Long 60% is kind of balanced, even though we're at the low end of the range. Sometimes we'll see that number tick up to 70, 80. Dollar yen, we saw that up to 85%.
Yeah.
So again, you can use this as, okay, people are long. So the majority of people are long. I want to go with the trend. You can use this as a contrarian indicator where, again, depending on the trader, well, if everybody's long, I want to be short because they're going to probably be wrong. You can use it whatever way you want. It's just, again, another tool to look at how people are positioning. And it's a little bit interesting to see this. So let's kind of walk through the pairs and see how balanced or unbalanced the book is. So remember, this is one slice of a huge market.
Yeah.
So we put context around it.
To kick it off here, you have 60% long in the euro-dollar market. And so, I mean, to your point, Pete, the first place, I asked you where the first place is, you go, this is one of the biggest forex markets in the world, tends to be one of the most liquid, have a lot of people trading in this market. But let's, maybe move down the tiers, maybe move from essentially Apple to Amazon and Microsoft and Google as an analogy in this space. And with that, let's go to the pound here, just because we probably won't have to talk about it because I'm guessing it's going to be very similar, 62% long in that. So again, short dollar, long pound. Let's start to get off the beaten path, though, and take a look at this dollar-yen market that, as you can see here, the daily chart, this is a market, to your point, Pete, when we were up here, was showing, at certain points, 70%, 80% short dollar, looking for that mean reversion. And that didn't come for a handful of time, but it did eventually come. Here at 152 and a quarter, it'll be interesting to see. I would guess 72. I'll guess 72.
I'm going to go in. I'm going to say 55.
55?
Yeah.
You looked at this beforehand. 63. Okay. That's really surprising to me. Yeah. 63%. Oh, gosh, long.
Yeah.
I was guessing 70% short. I was way off. Yeah. I was like, we middled this. I was way off. That's really surprising to me.
Yeah. Yeah, so now here's one where majority of people are long and the market is moving in that direction. So there is more of a, again, the carry trade can play into this because you're getting paid points to carry that position. And we'll talk more about that. I got a lot of questions over the weekend. I want to understand the mechanics of this a little bit. So we'll do some segments in the future talking about some of the unique properties of the pair here and where you get paid on a daily basis depending on the interest rate differential between the two countries. Some currencies, if you're long dollar yen, you get paid each night. If you're short dollar yen, you pay to carry that position. And the rate is the difference between the two interest rates, which is about 25 basis points in Japan and about a little under 4% in the US. So that difference in interest rates determines what the carry is. So it's an interesting dynamic. And some traders play that carry trade.
Wow. And so, yeah, between that and maybe people positioning themselves long, just because this is one that you would say is one of the purest dollar long plays.
Right.
Because, and part of it's because of the point you just made, where Japan interest rates are so low that it's almost like an even benchmark, that you're not looking at dollar competing with someone like the Euro area, where it's like they have high interest rates, so there's some competition. Same with the UK, high interest rates. So really interesting here. 63% long. Maybe it is part of the carry trade. Maybe it's something else.
What do you think?
Peso. Dollar peso here.
Yeah, dollar peso, which is another carry trade.
But in the reverse fashion.
Yes, absolutely.
I mean, I have to imagine this is 70% plus short.
I'm going to go 75% short.
This is unbelievable.
Wow.
Another piece of this is maybe not only coming up to the election, Pete, but we did in the last handful of hours get a lot of zigzagging back and forth that led a lot of people who were either short dollar in this pair or short dollar in this pair, especially look at this dollar yen. This got up to 153, 154 here, and then came all the way back down to trade in the 151 handle. So maybe a lot of those shorts got out of their positions. All right, you want to go last one here. Let's look at dollar CAD. This is
a good one to look at.
An interesting one in here. Another relatively pure dollar play. You can see this huge dollar run up.
I don't know, everything we've looked at, the weakest pair, it gave back a little bit of ground from...
Strongest for the U.S. dollar,
weakest currency pair really kind of we've seen in the past couple of weeks is Canada.
This one's got to be short. I have to... I'm going to put my foot down and say 65% short. You want to go over or under?
I'm going to split. I'm going to go with 50-50.
This is unbelievable. Yeah, I would imagine that a lot of this has to be people lightening up.
I think
it's ahead of this huge event. So the market a lot more split than we'd thought.
Yeah, and it's this is saying that again the markets has balanced out a little bit before an event, and traders are being prudent. They're taking a little bit off the table, which you should. I never want to go in with my whatever your full position is into a random, because you could try to guess what the market's going to do if X happens or Y happens. Very rarely, I think we've said this before. If I gave you the election results and said, here, you can put on a trade, but you can't manage it for 24 hours, I wouldn't take that. I wouldn't.
Yeah.
It doesn't give you enough. So you want to be mindful, take advantage of the randomness. We're going to see a little bit of the swinging. It should be an interesting dynamic. That the dollar hasn't backed off that much. So we've seen a little bit of selling, taking off the table. That's why those numbers have normalized a little bit. But it's another useful tool to look at, a little small slice of the pie, and which way it's leaning. So put that context into your trading decisions. And again, we can look at things like, if you want to look at something we'll look at next week is average true range, which is another way of looking at what has trading range been for a period of time. So it's the one standard deviation thing we like to look at in terms of probabilities.
What'll be really interesting as well is just tomorrow, seeing what these numbers look like tomorrow, because the move tonight will be across equities and everything else. Everybody will watch it. Maybe you're trading it or whatever. But keep in mind that also the day after these elections, when this unknown is now known, you tend to see huge flows. I forget, somebody on either Twitter or internally here had crunched the numbers and shown, it was just in the S&P, this year it was plus 1% or minus 0.5% or plus 1.5% on election day. The day after, they were showing some huge moves across markets. So keep that in mind. Check this stuff out tomorrow as well. And then we have FOMC on Thursday. So plenty of stuff, but let's get out of here. Hopefully everybody gets out there and votes and enjoys the election day. And I hope both people win, if that's possible. Both candidates, I think, should win.
All right. This is what I deal with every day. So guys, have a great day.